Hello everybody, welcome to my video series. This is video for day number 60% of the way through. So I thought, since that being a bit of a special, like big number milestone type of thing, I should give you a video that provides you with the ultimate amount of value, the most amount of value that I could ever think of. And then as I was still thinking about content ideas, somebody that's pretty close to me hit me up with a question that I dread the most, which is, how can I do Forex trading? So the answer is, you don't. That's the answer. You don't do Forex trading. So why should you listen to me about Forex trading? I did Forex trading before, made and lost a lot of money. I got out unscathed, mostly, for the most part. I did okay. I didn't make a lot of money, which is not the case for a lot of people who do Forex trading. A lot of people lose their money. A lot of people lose their minds. Some people even lose their jobs and lose their homes trying to pursue this thing. So my ultimate goal in this video is to get you to just not want to do Forex trading at the end of it. And why should you trust me? Because, well, your boy has been making videos for you for free for 60 days to keep you entertained and informed. So why would I start lying to you now? I'm not trying to sell you a product. I'm not trying to sell you a course. I'm just trying to help you out, and I'm hoping that you can give me maybe 15 hey, shit. I have to delete some videos to create space to make this video. So let me cut this one, then I'm gonna continue. So if you lend me maybe 15 minutes of your time, I'm going to make it worth your while to help you assess whether or not you want to make the decision to start Forex trading. Okay, let's go. So I started trading, I believe it was the end of 2019. That was during my time in undergrad. Most of my friends were doing it, so we decided to do it together. It was a bit of an interesting venture. We would buy courses, we would buy all the material that we could get our hands on, would watch all the YouTube videos that we would buy signals, and we were just doing our best to become really, really good at Forex trading. And we didn't do very, very well. Most of my friends, we didn't do very, very well. We spent a large amount of our time learning and picking up and just like watching courses, and we would have wins, we would have losses. Sometimes the wins would be bigger than the losses, sometimes it would be the opposite, but it wasn't much like change life or anything like that. And that was our story with it. I think we did Forex trading for almost about 3 years. So I would say I have 3 years experience trading Forex. Sometimes I would use money from trading to get me out of tricky spots in life. Like maybe I need to pay a bill that's worth $50. I have $20 in my pocket. I put it in a trading account. I flip it to 50, withdraw that money and just manage my bills that way. That's what I would do sometimes. I wouldn't recommend it. Sometimes it would work, sometimes it wouldn't. So coming from me, I do have quite a bit of experience with Forex trading. So I would be speaking from a position of authority. So you can trust me on that one. The way in which Forex trading works is that it's primarily, at its purest form, it's a bet. For example, you have an asset, maybe it's a currency, it's a foreign currency, it's the British pound or it's the American dollar, and you are deciding whether or not it's going to increase in value against another currency, or whether or not it's going to decrease in value against that currency. Somebody on the other end is taking a bet to the opposite of that, to say, no, I think it's going to increase or decrease depending on what your bet is. So depending on how the bookie or the broker is taking these these trades, or as I call them, bets, they could be A booking or B booking. B booking, I think, is the one where they take the trade against you, and A booking is one where they directly put your trade against somebody else who's trying to make the trade of the opposite side in the market. So since I have been doing a lot of learning because I want to become an investment bank, I know that in investment banking there are firms that do asset management. They are safe, and in the same company they would also have a trading desk, which means that they will be responsible for executing trades on behalf of the the clients. The investment bank will be executing trade on behalf of the clients. So sometimes what they do is they spend all this time making all of this research and just trying to find out information on whether or not this chart is this asset is gonna increase, whether it's gold, oil, British pound, US dollar, euro, is going to increase or it's going to decrease. They spend a lot of time really doing research, looking at the data, and they have massive teams. And for you to become an analyst at a trading desk, for example, if you want to be a summer analyst, you have to study finance, and then you apply for the analyst job, and then you can get it, but then you're still an intern. You're just helping on the desk. The guys that works on the desk, maybe the associates, they have working experience of maybe 3 years. They have maybe CFA qualifications, they have degrees in finance and all of that stuff. Those are the people that you are going up against if you're going to be making your trades. So now let's examine the efficacy of these people. The people who execute trades, who do trading for financial institutions, they're actually not all that good. They're not really great, because it's very hard to beat the market, especially if you're going to be doing stock trading, all of that stuff, picking stocks and all that. It's very hard to beat the market. That's why you have something like the S&P 500, which is a combination of the top 500 companies that are the top 500 performing companies that are in the United States of America. No one has been able to consistently beat the S&P 500. So what these guys did in the S&P 500, they just said, okay, we're going to take the money that we have, we're going to buy a small piece of all the top 500 companies. And sometimes they change by the year, so maybe they change. I don't know how they change the listing. I should learn about that one. So they change every year. Which are okay, this year we're gonna have this companies, or if this company performs below par, we're gonna remove it and we're gonna replace it with that company. So just by picking the top 500, the top best 500 companies, they have beat all of the greatest traders that you can ever think about, the greatest stock pickers that you can ever think about. And these greatest top stock pickers, sometimes they do beat the market, but then it's just 1 year. It's just 1 year of them beating the market. Yeah? So I'm saying all of this to compare with yourself, myself, and somebody else, which you don't have a degree in finance. Maybe you do, I don't know you, but you don't have a degree in finance. You don't have 5 years working experience at a trading desk at Goldman Sachs. You don't you want to depend on watching YouTube videos. You're gonna sit down, and you also have work to do. You have this other shit that's going on in your life, and then you also want to learn and to profitably trade, to participate in a profession that other people have spent 5 years, 6 years learning how to perfect and learning the fundamentals, and you expect to beat those people. You expect that you're going to beat those people with knowledge that you gained in 6 months. Come on, man. You won't. The best way to beat those people, the best way to beat them, is by taking your money and investing it in a mutual fund. It's not fun, it's not interesting, it's boring, I know. But the best way that you can beat those people is by taking your money and investing it in a mutual fund. It's very, very, very simple. Every country, they have a mutual fund. You find a country that you believe is going to do well, or a country that you're working in, or a company that you buy a lot of stuff from. Just buy their stake. Don't do stock picking. It's not it. Don't do trading. I know that there's a lot of people that are talking, like that talk, and they advertise, oh wow, we can teach you how to trade, you're gonna be a good trader. But a lot of the people that are that teach trading, and I will tell you so, and I could tell you so many stories, a lot of people that teach trading don't know how to trade, or don't trade themselves. Because if they did, then what business do they have teaching you? A lot of them make most of their money from teaching people how to trade. That's why they don't care about like trading, about like that's why they don't care about taking or executing certain trades, because they don't care if they lose money, because the money that they get is the money that they are obtaining from what do you call this? They are obtaining from seminars and all that stuff. That's how they make money. I know this because I know a lot of these people, and I've met them in person and I've seen them trading in person. They don't know how to trade, because they figured out that this is the only way that they could possibly make money in forex trading, by teaching people how to trade themselves, by selling signals. Do you know where some of these people get their signals from? They get their signals from people who are selling who are also selling signals. So because we observed this after, like, do you remember when I was telling you that when we were learning to trade, we were buying signals, we were joining groups and courses and all of that stuff? We observed that a lot of the time the material from the courses is almost the same. Not just the material from the courses, sometimes the signals from the groups, they're almost the same. You get a signal 5 minutes now that says, you should buy this thing, or you should sell that one. And you're in another group, they don't know you're in another group, and then the other group says, oh yeah, you should buy this thing, and you're like, this seems like the same thing. It's because it is. Forex trading is very, very difficult. Very few people are good at it, and you are assuming that those people who are good at it are going to sell you their course on how to become as good as they are for $10. And besides all of this, the most difficult thing in trading, the hardest thing that you could ever master in trading is this: mastering your mind, mastering how to be patient, like all of this stuff, not to be greedy. And because if you want the honest truth about the forex strategies, they all work. They all work. All of them, they could work, but then you don't work. They're not designed for you specifically. So you have to take time to find a strategy that works for you. So, like I said, that some people, they spend 4 or 5 years to learn this profession. You can't expect yourself to waltz into it and be turning a profit in 6 months. It just doesn't work that way. I know your Forex guru, or like the whatever ad they sent you, they told you that you could do that. But I'm telling you from experience, because I know and I love you and I want you to know, you're not going to do it. You're not going to turn a profit. It's not going to happen. Just like, sit down at your desk at work, just get back to work. Just polish up your resume, write your cover letter, make a post on LinkedIn, and get a better job. When you get money, you put it into the S&P 500, you put it into a mutual fund. It does a nice 5-6% every year, 3% sometimes, or maybe there's a loss. If it goes down, here's the secret: if it goes down, you'll buy more. Trust me, you're going to be fine if you do that. Just don't do this forex trading stuff. It's not for you. It's not going to work. Let it go. And if by this point I even convinced you I haven't convinced you that it's a bad idea. If by this point I haven't convinced you that it's a bad idea, let me give you one more point. The main reason why it's profitable for trading for big financial institutions to execute trades or to have a trading desk to execute on the behalf of clients is because they take brokerage fees from that execution. A lot of high net worth clients, or like clients who they have, like, who are trading big amounts, big fish, whales we call them. A lot of these whales, they make high money moves, like high executions. So if maybe JP Morgan or whatever is doing is going to broker the deal, the trade for them, maybe they get a nice 2-5% or something like that. So regardless of how they actually do on the trading desk, already they are making money on the P&L. It's not they're not getting a hit. But you, it's a different case. It's a different case because you don't have all of that. So I hope this was like discouraging enough for you. I hope it's because I didn't fail at Forex so that other people can be coming out here and failing again. We have to learn these lessons one person at a time. Okay, so I failed at Forex, and I don't want anyone else to fail at Forex the same way that I did, because I believe that we should learn by failing forward. So it's a bit harsh than I usually am, but then that's your day 60 special. Maybe one day I'm gonna give you stories of what actually happened with me in Forex. Yeah. So peace. I have to go to like a thing right now, so I'm gonna speak tomorrow.